biggest risk to the economy right now?
The biggest risk is something unexpected happening. I think the markets are factoring in a continuation of supportive monetary policy, potentially some help from fiscal policy, and a solid outcome from some of the uncertainties around trade talks and Brexit. So there's an expectation that things will work out. If that were to change, I think there would be a big reaction.
There's such a great reliance on monetary policy to drive growth. Suddenly, monetary policy can't be an engine of growth.
Well, people have been saying that for some time, and yet it continues to be accommodating. Inflation, as it's measured, doesn't seem to be a major threat at the moment. And I think, markets anticipate that this accommodating stance will continue. And you can look around the world and see that, unemployment is good, growth is good, trade is a little bit unsettled because of geopolitical things, but the amount of investment that is required around the world to meet the challenges of climate change and so on, should create the environment for a very positive economic backdrop.
Fed Chairman Jerome Powell has suggested a rate cut is coming. 50, 25? What's your take on that? What would make sense? What's realistic?
I don't think the market would be surprised with 25 basis points. I think 50 basis points would surprise some people. We'll wait and see what happens. I mean, like all central bankers, he'll take into account the signals that he comes from monetary conditions, from market conditions, and economic forecasts. I mean, I think this is a data-driven world, and there's no shortage of data to inform these decisions.
You talk about this data-driven world, and what data is important for the Fed right now?
Unemployment, growth. But the job numbers, I think, for most central bankers are the most important number. Is the economy generating activity that generates employment?
The other uncertainties, of course, Brexit. Just months ago, we were talking about how a no-deal Brexit isn't likely, or at least expectations eased. But here we are talking the possibility of a real no-deal Brexit. What's your take on that?
Well, I hope it doesn't happen. I think it would be a very adverse outcome. Both the candidates for the leadership of the Conservative Party, who would become the Prime Minister and have to lead the final elements of the process, have said it's the outcome they do not want to happen. But both are saying it's possible that it could happen. So, I mean, I think there is going to have to be a huge amount of effort with our friends in Europe to see what can be done to avoid a no-deal Brexit. I think it would be a very bad outcome.
If there is a no-deal Brexit, people like Richard Branson have said that the sterling would slump. He says parity versus the USD is a real possibility. Your take on that?
I don't think anybody knows, to be candid. I think
would it be surprising?
I don't think anybody knows what's going to happen. There have been so many projections of doom and gloom if certain things happen. They haven't occurred thus far. I think the human race is incredibly good at reacting to really adverse events and finding ways to mitigate what could happen into, well, let's make the best of what is not a very comfortable place to be. So, I'm sure that in the event that we end up with a no-deal Brexit on both sides of the channel, there will be actions taken to sort of make sure that it's not as bad as it could be. Now, where that leads to, I don't know. The responsibility should be to avoid it.
You seem to be more optimistic than most. What's driving that optimism that a no-deal Brexit is a possibility?
Well, I'm not optimistic that it's a possibility. I'm optimistic.
You're hoping.
I'm hoping that it's not going to happen. I'm hoping that we find some way of reaching an agreement with Europe that enables the UK government to agree the terms of withdrawal and enter into discussion on the future relationship in a positive frame with our European counterparts. I mean, that's what both sides want to achieve. The challenge politically is how to achieve that in what is a very short time frame now.
So, Douglas, I want to touch on the asset management business. That seems to be a turning point right now. Investors going more into passive investments compared to active. I mean, how do you stay at the forefront when such changes are happening?
Oh, I think it's a fascinating question. I mean, I think there are three mega trends in the asset management industry today. The move to passive, as you said, the increasing importance of private markets and the de-equitization of public markets, but probably the biggest change is the democratization of savings. I mean, individuals are being asked and indeed required to take much more responsibility for their long-term savings needs. Defined benefit pension schemes, either from state or from the corporate sector, are far fewer and less significant than they were before. And I think, you know, the savings culture, the savings needs that we have over the next generation to ensure that people retire with some degree of stability in their affairs and in a way that's fiscally affordable is hugely, hugely important. So I think as an industry we have a huge responsibility both in education in making people understand that they have to manage their futures much more on their own behalf, and secondly to provide the products that will help them create stores of value that they can decumulate in the future. Now, passive investing to some extent has given people a great opportunity to, in a low-cost way, aggregate assets. But part of the role of capital markets is to make allocation decisions, and that requires more than just passive. It does require people making choices, particularly, and it's one of the things, of course, we're here for this conference about, particularly to deal with the challenges of climate change and sustainable investing and so on, and that requires engagement with the corporate sector, with policymakers, indeed with society, as to what our expectations are and how do we deliver on them.
Given the current circumstances, is scale important? I mean, the pressure on fees and, you know, looking for cheaper alternatives.
I mean, scale is very important if you're providing very low margin products. If you're providing added value products for which you are remunerated because they're adding value, then scale is less important. So the real issue is how do you get sufficient scale in revenues to be able to afford the services that you want to provide to your customer base. If you're doing it in a very low-cost passive way, then you definitely need scale because the revenues you can generate from that strategy is much lower. If you're doing it in an active way that is generating investment value, both in terms of return and in terms of the societal impact that you are contributing to, then I think you can have less in volume but more in value.
We have seen a consolidation trend within the industry as a way of survival. Do you see that continuing?
Yes. You know, I think you're right that scale will be important to some. So if you're in the low margin business, you need scale. One way of getting that will be to combine. If you're in the active and advisory side, solution-based side of the business, you may want to add elements of solution that you don't have within your portfolio. So I think, yes, there will be continuing consolidation within the industry as it reshapes to meet the way that society is expecting it to interact with it.
Martin Gilbert made perhaps a dozen acquisitions in his term to get that scale. Are you looking to make acquisitions within the next 12, 24 months?
We're very conscious of making sure that we build from a sustainable base. At the moment, we are completing the combination of the two businesses that came together to form Aberdeen Standard Investment, Standard Life Aberdeen. You know, if there are bite-sized morsels that would fit the smorgasbord of capabilities that we've got, that might be interesting. But at the moment, we're focusing on delivering what we said we'd do when we brought the businesses together.